Hello and welcome to Market in a Minute, November the 18th, 2025. Low volume and weak momentum continue to plague KSE-100. The index drops again today, 750 points, confirms another lower high on the daily chart and ends up sandwiched once again between the 10 and 20-day exponential moving averages. Let's take a closer look. All right, so this is where we are, a 752-point drop for the day. The important thing to notice is that the lower high is in play since October here, early October, here, and here is now consistently in place. This was an attempt to break this lower high, and today's red candle confirms another lower high over here. And once again, the index ends up sandwiched between the 10 and 20-day exponential moving averages. Otherwise, it's pretty much the same story. Again, very thin volumes. Again, RSI drifting below 50. It's again, once again, in neutral territory. MACD crossover is still bearish and is still in negative territory. But the slight difference today is a small positive histogram, which reflects a modest easing in downward pressure. Other than that, the ADX is also all but lost its strength, now below 20, 18.85. So all in all, our verdict for the day would be that the short-term tone says cautious inside a drifting trading range. Of course, the primary uptrend is still alive as long as the market is above this 50-day exponential moving average. Below 50 RSI and the repeated failure at the 20-day exponential moving average keep the bias slightly negative. The only way for bulls is a decisive close back above 161, 162K levels, but on firm, very strong volume, not in weak volume like this. And failure to regain control, of course, would be a close below this 10-day exponential moving average, which is now just barely keeping the market up right now. That would open this way to this 50-day exponential moving average. Then this support over here, and below that is a very steep fall. So interesting times for the market. Stay tuned.